Good morning, SMF MMTs. Today's date, 1/15/2011, time 8:39 a.m. Pacific Standard Time. And we're here to talk a little bit and gather here today, MMTs, in our Saturday training. We're going over the Dow, okay, as we do every week and every single live trading day. And that your market making skills is judging the public and making a market. And when a market is made to the upside, you're there. And when a market is made to the downside, bam, you're there. When markets are made with the public and the bulls are getting all in. And we have a options expiration coming up along with an explosive financial earnings season of the first quarter of 2011. And the SMF Market Making School will be taking their apprenticeship live training, the new MMTs with real entries and real exits, and a whole year will be ahead of them. And this will be for the new people, some of their first earnings and whatnot. We're getting top heavy here on the Dow. So when we have this last topping pattern right here, we're just going to take a look at this one here. We're going to take a look at this weekly bar that was over here at the time, and we clearly see that half of that bar right here that we kept bouncing up above half of this bar. This is where that 3-day top got put in, right to that delta line. 28.36 per line ratio in your market maker platform. The thing of it is that each pullback that we had, we got back up and maintained half of that bar. Then we came right back and we closed and maintained above half of that last breakout right there, MMTs. So now that we've had the second one occur up here at this top end of your delta lines, which prices the market before the market is even open. This is Monday's prices. What can I say? Now, with the earnings season, they're going to be looking at where those earnings are coming in. MMTs on the Dow earnings, that's 30 good stocks. So basically, there's going to be a mixed bag of earnings. I would say that 75% of the earnings will be fine. I will say that we'll be watching the guidances. I will say that we're at all-time lows for the bear right now, and we're at all-time bulls for the bull high count. And we're going into a very explosive week because we are going to be riddled with headlines and earnings and guidances and you name it, MMTs. That is going to be the public model and how they react and how you, MMTs, will be able to steal wholesale prices and understand how to trade. If the Dow remains in elevated levels, as it can, doesn't matter how the fear factors are running, and the bull count and the bear count ratio is totally imbalanced, meaning that somewhere down the road here, one of these days, we're going to have a pullback because of the imbalance, MMTs. But we'll let the public decide what day that will be. And what we're going to be looking for is how the topping pattern holds and sets up and pulls back to half of this bar right here. This one right here is 11,727. That's what it is. The current half bar of the previous closing day on Friday is 11,746. They drop down to support like these little wicks and they bounce off of it. They maintain up on half of the body and you start holding that upper part of that delta line, and then the headlines from the earnings and the options expiration can break that Dow to the upside, but it's going to take some of the Dow transports to really come in nice, where money will want to chase the market. All the money on the sideline is going to be coming off. I'm going to talk about a new MMT and an older MMTs, is that you've been through these earnings. So I'm going to let a senior apprenticeship, people that are in the 12-month market making school apprenticeship with live trading to make profits, earn while you learn. This is the only market maker school on the internet. I'm going to introduce one of our senior apprenticeship enrollees, and Mr. Schubeck Scott Schubeck is his name. So basically, since you have been through previous earnings here as a market maker, what can you tell the new market maker enrollees right now?
Tell that they're in for one hell of an exciting week. They're going to see the bids flying, and you're going to see price action volatility. You're going to see lots of drop down bids. You're going to see lots of really good expansion in deltas, and you're going to see lots of really great trades and a lot of money made.
Correct. Now, since you've been through earnings season and the after hours trading for a couple of quarters, you're about a little over halfway through your apprenticeship right now?
I'm 8 months through 12.
So you're 8 months through 12 of your apprenticeship. Has your apprenticeship done and validated for past experiences that you've come here, that you have seen how to gauge the public and make a market instead of being part of the public model that you once were before coming to SMF?
Oh, absolutely. Absolutely. Night and day difference. I'm a whole different person when it comes to, trading and the approach to the market.
Okay,
what an improvement.
What about your risk management techniques?
Oh, well, they went from almost zero to a very complete 100% strategized method and approach and a system of approaching risk management.
Well, that's nice to know. So, in your view, you've been taught about how market tops were made before the flash crash, were you not?
Yes, I was.
Can you explain to me on the Dow then what you see in resemblance to that?
Well, I see the absolute same thing. We have a incredibly overbought market situation where equities are pushing their extreme overbought inflated prices, and going into an options expirations and earnings situations, you're seeing where these overinflated price actions are developing even further, and where the public is going to engage to either chase these prices higher, or you're going to see a pullback, and just like you saw last year and in 2008, where these incredibly overbought markets are pushing their tops. How much can they maintain this overbought situation? How much can these overinflated equities stay at this price? And how much further? It's the identical situation on all indexes across the board.
Well, would it be safe to say, in your view, that the fear and complacency, because this is a little bit different than the one